Hello and welcome to the Future of Day Trading Remastered for 2022. In this lesson, we'll be talking about break levels. Okay, now that you understand how to properly hard close a candle, let's talk about break levels. Break levels are on the charts moments that try to break levels. You hard close a candle and that's one form of breaking a level. So you could have a 4-hour time frame and a 4-hour hard close on top of that level. So in this case right here, let's go to the 4-hour time frame. You could have something like this one right here, which is a valley, and you would be holding the entire move down. And if you were to hard close over top of it, it would break the move. This is not to be confused with a break level. A break level is the valley or peak in the move that you see created in these time frames. So a break level would be like this. So you have a 2-candle valley here, right? Let's make this red so we understand it is on that time frame. And let's use the triangle tool to demonstrate what the valley looks like. And the valley or peak is always 2 candles. So on the opposite side of the chart, you would have this one right here. 2 candles, it starts right here. So this is the one we're going to use. And you would have that same exact kind of thing here. Valleys and peaks on your charts, where candle valleys start, defined by 2 candles of the same color on either side of the chart. Now, a break level is the actual wick of that move. So in this case here, if we were to just move this sideways a little bit so we can get to our level tool, it would be right here. The break level would be the wick of the move. So you have your valley right here, which is the 2 candles in distribution color. It can't be 2 candles in accumulation. When we're going down in the chart, it can only be distribution. And when we're moving up, it can only be accumulation. So when you have the 2-candle valley on the daily right here, this represents a break level. This is the first moment that has to happen in order to break that valley or break the move and start moving up in the charts. Whether it's laddering, whether it's hard closing levels of smaller time frames, the break level is the first indication that something is going to break, for the simple fact that it has stopped laddering its move. If we were to zoom in right here and go down into time frames, it would be the difference of, and we can just move this down just a little bit so we can get access to this. And we're going to duplicate this level real quick. So if you were to move anywhere below this, the simple reason that this is a break level is because even if you were to go to this moment, let's rewind 1 candle and pretend like we didn't hit it and go right here. And actually that was 2 candles we rewound. So the reason that makes this a break level in the next candle and not this moment, because this could still create a trend. Accumulation to accumulation candle, it hasn't hit its break level, it can create a trend. The moment that it hits this mark right here, it can no longer create a trend because there is no angle to the chart. Even if it was a 1 angle degree, even if it came so close, like right here, and you could zoom into the charts and find the closest spot you could get, and we can just continuously zoom in here and we can move this here and we'll put that arrow right there. Even if it was right there, and let's pretend this was the accumulation candle, this would still be a 1 degree trend. So it's the difference between having a trend versus not having a trend. And that's the dictation of what makes it a break level. You do not create a trend, which could possibly be compression in the future. If you were to create this trend right here, and even if it was right here, the slightest degree in the future, this could act as compression as time goes on. And the longer it takes to come back up to this level, the greater that will compress it down. So this is the defining criteria of what breaking a move looks like, or the very first step in breaking a move. It hits the break level, which assumingly now there's no trends to create. So actually what you could do is, let's go forward a candle here. Aha, it hit the break level. What does that mean? Oh, all of a sudden, instead of creating a trend from here to here, now we're creating a larger trend and being in a larger spectrum of the move or into a larger range, possibly right here. Maybe it was like this. Today we continue to hard close and then we have a trend here. So what you've essentially done is you've said, I am no longer inside of this valley range right here. Here to here, I'm no longer inside of this valley range because we didn't ladder the move. Actually, we can just delete that off the chart now because we hit the break level and we're trying to move up. And then you're going to need your other confirmations to happen, like hard closing a trend and hard closing a level. So again, maybe throughout the course of the day here, we can actually break this trend by continuously moving up or even holding this price right now, because the bottom side of this accumulation candle right here, as per our hard closer rules, well, the bottom side is closing over trend. So you're breaking trend, which would just give you your next trend and would create the cycle of a move. So when you create the cycle of a move, then you're getting into another different realm. But then this becomes the criteria of creating the next piece on the chart. So the break move represents the first attempt to break a move. So this one hasn't happened yet, but we've defined the criteria of what a break could be, 2-candle valley. And there's smaller breaks and smaller time frames. When you go down, you would look for the next 4-hour moment, which would be right here. And this is indicating that this move is going to try to break in the future, which attacked it right there and it broke. And you could continuously move down and down and down and find smaller and smaller and smaller break levels. You could find one right here, which got attacked there. And then you could go down to your 15-minute time frame. And we're just leaving these red for illustration purposes. And then you could find like the 15-minute, where would it be? 2-candle valley right here. And you would see, oh, it's trying to break the move. It's trying to break the move again. And then it succeeds in breaking the 15-minute and the hourly's already tested and it's broken. And then you just get this chain of events that ends up being this roller coaster and like a pretty amazing result when you just continuously move down in time frames. Again, you know what we're doing here? We're using the effect of time to move forward in our charts, down and down and down into time frames to see more finite moves and more concise, smaller components of the chart where you can see that breakout earlier and earlier and earlier. And you could go to a 5-minute chart here, and you could then go and say, well, where's the 5-minute break level? It would probably be in existence somewhere down here. You'd have the 15-minute here, which was attacked there. So then the 5-minute would have been right here, and so forth and so forth and so forth. So you can see how this constant compression or recycling of the charts happens even with break levels. Break levels will go and attack smaller breaks forward in time on lower time frames, and forward and forward and forward, lower and lower and lower until they get to these explosion moments, and even down into here into like 1-minute charts where you have a break level. It breaks, it fuels the attack on the 3-minute and then the 5-minute and the 15, and you start hard closing like a 15-minute trend and an hourly level, and then it's too late, the move's already gone. So there's lots of ways in which we can use the effect of time to see great information. Okay, so now let's look at a part of the move that's already happened so we can analyze the break levels and see how the effect of time has a role in this. So we know that the daily point starts right here. So that's the very first thing we can mark. We can mark the 3-candle valley. It's the start of the valley is what you want to mark. Now, regardless that this wick is lower than it, all this is showing us is that we can use a different time frame moving forward, but we would start the beginning of this valley on the daily time frame, highest time frame down. If we were to go to the weekly here, we just simply wouldn't have enough information, so we can't use a weekly. So we go to the daily, we mark the valley, or what would just be the break level. So we don't need this actual illustration of the triangle anymore. What we need to do is mark this as a break level. We can make it red and call this a break. This is going to break the move in the future. So now we know if we were to go down into timeframes and forward in the charts, we could find the moments that this thing was breaking. So we could go to the 4-hour, and we would need to find the next valley in this chart that would show, hey, this move is breaking. You actually couldn't go back here because remember, you can't go backwards in time regardless if this is lower. You actually have to use this point and move forwards in time. So the next valley that starts to try to break this move would be here. And we can mark this yellow as it is a 4-hour level and a 4-hour break level. And you can see this one is noted break here on the right side. I'm going to move this to the left side so you guys can see it with my camera. So we know that we're creating a chain of break levels. This is also a break level, and we know now going forward, we have to be breaking this move somewhere past this candle. So we can mark this right here, and we'll move it down to the hourly time frame next. So we're just going to color code this in the moment right now, knowing that we need to use it in the future. So then we can go to where that was actually created, and we can mark the next break level, which would be your 2-hour or your 2-candle valley on the hourly chart. And that got broken right here. So now we can go and mark this one right here and find the moment in time going forward where we have the 15-minute. So we can mark this as a gray. Go right here, and you're starting to see how this move is degrading over time and how it is losing strength in the move. So you'd have to go forward in this moment right here, and you'd be right here in the move, the next 2-candle valley and the move past this. So now we can see when this breaks, you would actually be here in time, which would give you this candle, which is where you'd have to start on the 5-minute time frame. So now we can move down to the 5-minute time frame and see where that next valley exists. The 2-candle valley is right here, and you really don't have much left in this. You have a 3-minute and a 1-minute level that's protecting this. Well, in this moment, it was kind of interesting because it created a trend. Well, let's see how that trend is being used. Accumulation to accumulation candle. If you were to go through this and hard close it all the way from here and down and down and down, you'd end up right here, and then you would end up, looks like right here is where you'd end up. So you'd go forward in this chart, and you can see where that breaks, and that trend loses its trend, assuming that if this level gets hit here, you're going to break the move down. You can move forward in time, and hey, the level never gets hit. It actually holds the break of the move using this trend, and it's maybe strengthening in time. So you could go back to this moment and you can see where that break level never got hit. So it actually can't break the chart down anymore. Rather, it's creating a ladder point. So you would go in this chart and you would say, hey, this is actually a 4 to 4 hour trend right here. Let's go down in time frames and let's see where it broke the hourly, and it breaks it right there. So we can go to the very bottom of the move here, which is your hourly. So we can change this color now to the hourly. It then breaks it down one more time right here, and you've got your trend. We accidentally broke that, and you can now see where this move starts to reverse itself, and you can create your local trends off of this because it didn't hit that break level. Go right here to here in the move, which would then move out to here, which you can see breaks down to this moment right here. And all you're doing is hard closing candles to see where this thing is trying to go, distribution to distribution candle, and it breaks there. And now it's trying to go the other way and break its move down through the loss of this trend, which I don't think is quite happening right now. But when we follow the trail of break levels, you can see where this move created an architecture using the effect of time and break levels to show you when it's ready to stop breaking its move down, and when it's ready to actually, instead of hitting that break level, when you go all the way down to the 5-minute time frame, remember, we didn't have much left here. We only had a 5-minute time frame, which is telling you, hey, if you continue to lose this time frame, you've only got 2 left before this move completely dumps and it's lost too many break levels and it has this huge collapse. But now you can see where the 5-minute break level was created, and we never actually attacked that. Instead, we created ladder points and trends off of what we originally said the difference between hitting this level and slightly moving above it. Go back to this moment from our first example, the difference between this would be creating a trend, which can be future support. And now you don't actually break the last piece of the move down, because if you had hit this, well, indeed, you aren't creating a trend, which is support for the future, using the effect of time, working all the way from the beginning of this range on the daily chart, finding the points of reversal and moving through your chart in a very concise and clean way. The break level here, which originally moved all the way down to the 5-minute before the final moment where it may collapse off the most greediest point of this range, and then it has a large move up, and you can just hit play here. And you'll see that now Bitcoin is moving up because it used the effect of time to show the most finite piece of the chart using break levels to see what is possible and what's not possible. And if a break level doesn't get hit, it's not possible for the move to break. Actually, the opposite happens. You create trends which support ladder points, which create hold levels, which we're going to talk about in the next video, because this is all about break levels. And you can kind of see where the logic exists. And you can kind of see where having a move that has these break levels gives you a very definitive point of data that says, hey, we're either breaking this move, continuing to lower timeframes to see the final moments, or hey, we haven't quite hit a break level. Let's start creating trends using the effect of time and building up timeframes now. That's a really cool lesson on break levels and what they actually mean and how you use them and how to use hard closes with all these theories combined. Now we're really starting to create something very magical in terms of creating this science and these data points to make really accurate decisions and then starting to really pinpoint accuracy to the craziest level. So I'll see you on the next one.